Alcoa kicks off second quarter reporting season today after the close. Profits, excluding one-time charges, are expected to rise to 33 cents a share from 13 cents a year ago. Well, Brian Yu is an analyst at Citigroup and a Bloomberg best on Alcoa, and he has a hold on the stock, and his second quarter estimate is just below consensus. Brian joins us now from our San Francisco bureau with more. And Brian, the stock is off today. Why is that? Is that in anticipation of today's earnings call, or is that because of everything that is happening around the world these days?
Yeah, I think it's a little bit more the latter. We are seeing consensus estimates come in. Last week it was 34. It's come down to 33, and I think some of the latest indicators have it coming down to 32. On top of that, because of what's happening in the rest of the world, aluminum prices, they've dropped too. So last Friday, closed at $1.15, and the last I saw was $1.11 on the London Metals Exchange. And this is a company that's very levered to aluminum price, so I think that's contributing to the drop in the share price.
Brian, on that point, we tend to talk a lot about commodities prices, precious metals. We talk about gold. We talk about copper. Aluminum is not something that tops the list of metals that we talk about on a daily basis. Just how reliant are aluminum prices on news of China's economy, news about our economy, news about what's going on in Europe?
Yeah, there is a lot of leverage. When we look at global aluminum demand, about 40% of it is driven by China. So what happens in China ultimately impacts the supply and demand balance in the market. As well, aluminum, because it's an exchange-traded metal, it does become highly correlated to the movement, or inversely correlated to the movement of the U.S. dollar. Dollar weakens, aluminum prices tend to strengthen, and vice versa. So there's a strong relationship there.
Now, the interesting thing is, aluminum prices maybe just recently haven't been performing well, but over the last year have certainly performed well, and that's clearly reflected in the price of Alcoa stock over the last year. But you also talk about rising costs putting a lot of pressure on the bottom line. Break down what the rising costs are.
Yeah, so for Alcoa, you have a company here with 4 major business segments, and we can break it up into upstream and downstream. So what we're seeing the cost pressures is in the upstream side of the company. In aluminum refining, we're seeing increases in diesel fuel, fuel oil, caustic soda, and in their aluminum smelting, where we're seeing cost increases are power, pitch and coke, as well as some of the other inputs. So it is going up, but so far the aluminum price increases outpace some of the cost escalation.
Explain how currencies have an impact on the bottom line. We've been talking about the dollar today. A number of analysts saying that they actually expect the dollar to do better versus the euro by year end. Is that a plus or a minus for Alcoa?
Well, if the dollar strengthens, it's probably going to be a minus for them. And I say that on the cost side, a stronger dollar will help the company out a little bit on the cost, because it's a global company. They have operations in Australia, Brazil, and other currency. Dollar strengthens, those foreign currencies weaken. Translated back into U.S. dollar, you get a lower value. However, I mentioned earlier, there is an inverse correlation between aluminum prices and currencies. So as the dollar strengthens, what we're likely to see is the aluminum price weaken. And if we look at historical trends, what happens is the revenue component is much more important than the cost side. So if the dollar does strengthen, I think it's going to be a headwind for earnings.
Brian, what are you listening for on tonight's conference call?
Yeah, 2 things that we're listening for. One topic which we've touched on quite a bit, which is cost. The magnitude, directionally, I think we know it's going up, but how much? So far, it's a bit of a guess. And is that cost increase going to tail off a little bit as we look forward in the next 1 or 2 quarters? The other side is the downstream pieces of their business, flat roll products and engineered. Those businesses tend to be much less commodity-oriented, and they're in a cyclical upturn, very levered to aerospace. So we're hoping that the management will guide to continued margin expansion in our downstream and their target, where they're expecting 2013 revenues for those pieces of business to recover back to 2008 highs.
Now, you said their customers are on an upswing, right? I'm going to put that into plain English there. And the aerospace industry is one of them. The auto industry is another. Are those 2 industries that you expect to continue to do well? And on the auto side of things, are more and more car makers going to use aluminum as opposed to, say, steel with higher fuel costs?
Yeah, you're right. And aluminum is while it's a little bit more expensive, it's a lighter metal. And we have seen structural content increases in the amount of aluminum contained per automobile. And I think that's going to be ongoing. That's why aluminum is one of the fastest growing demand metals that we see, high single digits, low double digit percentage growth. And that's auto, and that tends to drive about 35% of global aluminum demand. Aerospace is important for Alcoa because of their engineered products, less so for the overall aluminum market.
All right, Brian, we got to leave it there. Thank you for joining us. That was Brian Yu, a Bloomberg Best. He's an analyst at Citigroup, giving us a preview of Alcoa's earnings.